Alright traders, so now that you understand the fractal and what the fractal is, and you understand the 1, 2, 3 and the A, B, C, D pattern, 1, 2, 3, 4, A, B equals C, D, whatever you want to call it. Now that you understand those concepts, it's time to now get into the strategy of trading fractals, the different types of trades we could take. So the first one that we're going to be paying close attention to here is the fractal break trade, okay? So Bill Williams stated that trading fractals is an easy way to make sure you're trading with the direction of the market momentum. So when any market makes a directional move, it builds up momentum. This momentum is like a rolling ball that continues to roll until it meets resistance that has more power than the momentum of the ball. The initiating fractal tells traders which way the market momentum is flowing. It also virtually guarantees being included in any significant trend move. Alright, so the fractal break strategy without Ichimoku. So the first and most basic strategy we're going to discuss is the fractal break strategy. When looking at a bull fractal, we are only concerned with the middle bar high, and on a bear fractal, we are only concerned with the middle bar low. So when the market is making a bullish move, it creates a top and then makes a correction down with two bars that have been lower, that has lower highs to create that bull fractal at the top. So after the correction has completed, if price continues higher, price will break the top of point A, and point B is now a bull fractal breakout. So point A is now a bull fractal bounce located on the correction. So we'll look at this. So here's point A. So point A is created, that's the fractal. The market goes down, makes a new fractal, and then point B violates point A. Alright, and that's where your buy order is. That's a fractal breakout buy. So here you see a bull fractal. Here we can see the market created a bull fractal. You place a buy stop 1 pip above that bull fractal. 1 to 2 pips above that bull fractal. You can see your trade would be triggered. The market creates a bear fractal. Place a sell stop 1 to 2 pips below that fractal. And you can see your trade will be triggered. Alright, so let's look at some rules for our strategy. So basically, an aggressive entry, you place a buy stop 1 or 2 pips above the bull fractal high. So this entry is going to limit the risk, but it's also going to limit the probabilities. So the probability of the trade working out is limited. And then the conservative entry, it will enter long on the candle close above the bull fractal high. This entry increases the risk because you have a bigger stop loss, but it also increases the probabilities that the trade is going to work. You get past that fractal high level where you don't have that possibility of not breaking the level and ranging. So you got to decide if you want to take an aggressive or conservative entry based on your analysis, comfort level, and money management. I can't tell you exactly what to trade. I can show you how to enter these trades, but I can't tell you this is the one you need to be taking. Alright, sometime you'll weigh that out based off of the way the trade is setting up for you. Alright, so here we could see 1, 2 bear fractals, and then the market breaks this bull fractal. Your aggressive entry would be right here to enter at that. You put a buy stop right there. The conservative entry would be at this level. You can see the big difference. Your risk is much bigger because you have to at least have your risk down to here, here, or here. Alright, but if I enter here, when this candle breaks, I can put a stop loss there, there, or there, which limits that stop loss, but it doesn't mean that the close is going to close above this level, which is the range level, right? Because when we look at a 1, 2, 3, we got 1, 2, 3. We're trading at 3, or we're trading at 2 basically now, because this is a 1, 2, 3 breakout basically. Alright, but when you look at this, this is less, at this level here, this is the probabilities decrease if you're entering here, because you don't have the close, which this level is fluctuation, as I told you before, and a lot of times you're going to get ranging at this level. So when you get the breakout, then if you wait, you're going to increase the risk because you got to increase the stop loss. So your second rule is your placement, place your stop loss placement. So place your stop loss at one of three places: the previous bear fractal, the low of fractal being violated, or the low of trigger candle. So stops got to be based on money management and should never exceed the 3% of your capital. So if the stop loss is greater than 3%, then you either reduce lots, use one of the levels that minimize your loss to 3%, or do not enter the trade. That's all to it. Alright, so here's your stop losses. A, you can put a stop loss at the low of the candle that triggers the trade, because we're entering at this level right here. Alright, so you enter here, this candle triggered it, so you put a stop loss here, or stop loss at the low of the bull fractal being violated. This is the bull fractal being violated. You can put a stop loss there, or the last place, which is the best place but the biggest risk and the biggest stop loss, is the previous low, bear fractal low right here. All right, because this is where the market changes, and until the market violates this level, your trade is still good, even if it's in a drawdown. All right, but the stop loss is big, very big. So none of these stop losses should exceed your 3% max loss of capital. Keep that in mind always. So now let's look at a bear fractal breakout. So rule 1, pretty much the same: aggressive entry, place your buy stop. Actually, this is the sell stop. So place your sell stop 1 or 2 pips below the bear fractal low. This entry limits risk but also limits the probabilities. And then conservative entry short on candle close below the bear fractal low. This entry increases risk but also increases your probabilities. So you're going to be placing a sell stop, not a buy stop. Place your sell stop right here at an aggressive entry, or your conservative entry, close right here, enter the market. And then your stop loss placement, one of 3 places, just as previous bear fractal low, low of fractal being violated, low of trigger candle. Stops must be based on money management and should never exceed 3% of your capital. If the stop loss is greater than 3%, then you either reduce lots, use one of the levels that minimize your loss to 3%, or do not enter the trade. So here you can see where your stop losses are. One, you're going to have first your stop loss A, which is going to be stop loss at candle that violates the fractal. This candle violated the fractal. All right, now you could see if you had taken that violation level, if you basically took a an aggressive entry, you'd have been triggered on this candle. Your stop loss would have been here. You would have been triggered already right here. All right, but let's say we triggered here. That's the candle that violates. And then your next stop loss level is at the high of fractal being violated. This is the high fractal. This is the fractal. So you want to go at the high point where it's being violated. And then finally, your previous bear fractal high right there. That's the safest place, but the biggest risk, the most loss. So another fractal break that we want to take notice of is the first fractal break. This trade comes after price has made a rally or decline and then breaks a fractal in the opposite direction. Price has broken bull fractals at points 1, 2, 3, but failed to break point 4 bull fractal. 1, 2, 3, 4. So we broke 1, we broke 2, we broke 3, and we never in the process broke bear fractals. Alright, so you can see price has broken first bear fractal at 0.5. We can enter aggressively at the level or conservatively at the candle that broke close. So we have 1, 2, 3, 4 fractals here. And finally the market was unable to break that 4th fractal, where it found resistance and could have came into a range level, but it violated this first bear fractal. Not this one, not this one, not this one, but this one. Mostly you want that close, but a lot of times you're going to be able to tell with that violation. And this close wasn't that far away. That's what you really like. And then when we got the break, you can see how price continues to the downside with a big gain. So the fractal break strategy using Ichimoku. So to help decipher which trades to take, Mr. Williams created the alligator indicator. The indicator applies convergence, divergence relationships to build trading signals, with the jaw making the lowest turns and the lips making the fastest turns. The lips crossing downward through the other lines signals a short sell. opportunity, while crossing upward signals a buy opportunity. So I'm going to look at the alligator a little bit. So basically you could see the Bill Williams and alligator, they're just moving averages. All right. But the blue line is the jaw. The red line are the teeth. And the green line are the lips. So your jaw line, which is the blue line, this is the balance line for the current time frame shown on the chart. So it's a 13 candle smooth moving average, offset 8 candles into the future. And then your teeth line, red line, this is going to be the balance line for one significantly shorter time frame, and it's an 8 candle smooth moving average, offset 5 candles into the future. So you can see everything is offset to the future based on like Ichimoku also. And then finally your lips, which is the green, this is the balance line for still one more significantly shorter time frame, and it's a 5 candle smooth moving average, offset 3 candles into the future. So it's offset just pretty much like Ichimoku. So a balance line, you want to understand what that is. A balance line is a line showing where the market would be if there were no new incoming information, right? So the distance between the balance line and current price is the result of new incoming information. New incoming information would first affect the green line, followed by the red line, and finally by the blue line. So when the alligator lines are intertwined, this means the alligator is sleeping. When the alligator lines are separating, this means the alligator is awake and hungry. So here you see the lines are intertwined. Alligator is sleeping between this point, but he's starting to wake up. The lines separate. Alligator is hungry. That's when you start trading. So all these areas here, the hungry for bears, do not disturb, hungry for bulls. So the purpose of the alligator is to provide an integrated approach to monitoring the market's momentum on 3 different time frames on one chart. Provide a simple indicator to know when a trend starts and stops. Create a protection device so as to not lose money during a bracketed range-bound market, and to provide an advanced indicator to signal the end of a trend. All right. Well, the purpose of Ichimoku is to provide an integrated approach to monitoring the market's momentum. Provide a simple indicator to know when a trend starts and stops. Create a protection device so as to not lose money during a bracketed range-bound market, and to provide an advanced indicator to signal the end of a trend. This is pretty much the same as your alligator. In fact, to me, Ichimoku is much more better than your alligator, and that's why I do not use the alligator. Don't you believe if I thought the alligator was better, I would be using it. All right. So how do I enter a bullish fractal break trade? So with using Ichimoku, you're going to wait for a bullish TK cross. You're not going to trade any breaks unless you have the cross in that direction. So wait for a bullish Tinkinson crossover, where Tinkinson crosses Kijinsen from below to above. Find the first bull fractal after the bullish TK cross. Place a buy stop 1 pip above the bull fractal. Your stop loss can be a variety of levels, such as the previous bear fractal candle low that violates the fractal low of the violated fractal, and close below Tinkinson or Kijinsen, your choice based on risk management. So profit at close below Tinkinson, Kijinsen, or bear fractal levels. So we'll look at that. And then how to enter a bearish fractal trade is just the opposite of the bull fractal, pretty much the same. But the main thing, you just want to wait for the bearish TK crossover to take a bearish fractal break. So let's look at the chart. All right, so basically you can see we have a bullish TK crossover, and here's the first fractal after the TK crossover. All right, so after the bullish crossover, this is the first entry we can take. All right, and it doesn't matter about this ranging. We're going to take the first fractal, bull fractal, after the bull crossover. If we put our buy stop 1 pip above this previous bull fractal, bam, we're in the trade triggered. Then there's another fractal, we can put an entry at that level, bam, trade triggered. And you can see how much this would happen until finally you would take profit on a close below that fractal here. So all the way up, you take this trade here, you never broke a previous bear fractal. So if your stop loss was at the previous bear fractal, you'd have never triggered out. Now you could take your profit in a bunch of places, but the ultimate last place is the fractal break in the opposite direction, and the close below that, and you take the you close out. Now here you got a bearish TK crossover. Now you got the first bearish fractal. Now this was a break here, but you got a first fractal of this direction because you got a TK crossover that's bearish. On this side you had a bullish crossover. You place a sell stop 1 pip below the bear fractal. And you can see your trade was triggered. And you can see you would have profited 197 pip profit. Now if you would have waited for the close here, you probably would have stopped out here. You would have got out here and made no profit again. So that probably is more likely where you would have got out of the trade and didn't make as much profit, but the potential was for 197 pip profit. Alright, so that's it right here. I think it's best if we go look at some charts and learn how to trade the fractal break. So I'm going to take you to the charts and we're going to look at fractal breaks and we're going to trade those. So I'll see you at the charts. Alright traders, so let's learn how to trade this fractal break the proper way. We're going to learn to trade it without Ichimoku and with Ichimoku. Okay, so let's look at this real quick, and also we're going to start from the 1, 2, 3. So that's going to be a big part of understanding the fractal structure is the 1, 2, 3. That's going to show you the direction you should be trading, also to help you to know when there's a reversal, because the 1, 2, 3, as we talked about, is a reversal and a continuation pattern. So you want to see that continuation or that reversal. Now nothing's 100%, but it's high probability stuff that we're talking about here. Alright, so when we look at this, first thing I'm going to look at is my 1, 2, 3 structure, because I want to know if I can continue to trust the break of these fractals right here. Alright, if I'm going to break this fractal, or if I'm going to break this fractal, or whatever fractal. So I want to see my 1, 2, 3 structure. So going back, if price had been right here, well actually right here in this area, alright, and then I still want to see if it's reversing here, because at this point you probably have support and resistance. So you would find that, because we see the move that already happened. So you would mark this level, and going back you could see you have support and resistance. So you would have your support and resistance levels on your chart, and then when the market comes down to those levels, you want to look for your 1, 2, 3. Now we're going to get confirmation of the 1, 2, 3 also, but first we're going to count the 1, 2, 3. So on a downtrend you're counting the highs as 1. This would be another 1, and then 1, and then 1, so forth. When you're moving higher, you're counting the lows, the bear fractals, as 1s. Alright, so we're moving down still. The market's trending to the downside, so we're going to count the bull fractals as the 1s. Alright, so let's mark these. So starting here, we have a 1, then we go to a 2, and then a 3. Alright, so we have the 1, 2, 3, and we violated 2. So now we have a 1, 2, 3, 4 structure. So violating 2 confirms the 1, 2, 3 continuation move. Alright, but if you violate 3, that confirms the 1, 2, 3 reversal move. Now on here we did not violate 3, we violated 2, so the continuation was to the downside. So I marked this fractal already, so let's start here now. So we go 1, 2, 3, and now 4 would have been, 4 needs to break 2 in order to be the continuation. 4 did not break 2 and it broke 3, which then let us know that this was not a continuation move but a reversal move. So it was a 1, 2, 3 reversal. So looking at that, we never broke 2, but we broke 3. So we want to confirm this when we see the market come down here somewhere and we break this level. Let's get some confirmation. So how would we do that? Since we're at a strong support and resistance level based off of what we looked at back here, and you could see this support and resistance. Alright, so you would now go to our main thing, which is our divergence here, and you could see there's major bullish divergence. So you should have expected a move here and a break of the fractal, and the market moves higher. So everything works in the favor of what you see happening here, all right, based off of what we see. Now, nothing I give you is 100% guaranteed, but again, it's high probability, and it's going to work for you mostly all the time. Now, there's going to be times when it doesn't, but most of the time this is something you can really put your hat on. All right, so that 1, 2, 3, we violated the 3 level, which means it's a reversal. If you violate the 2 level, it's a continuation. Keep that in mind. So as the market went higher, we were breaking bull fractals, broke this fractal, broke this fractal. So now we're going to count from the bottom. We want to see that 1, 2, 3 continuation. So we have, I'm going to mark these fractals. So we need to know which way the market's going. 1, this now becomes 2, 3, and then we would have 4 up here. So we broke the 2 when we know which way the market's going. It's continuing to the upside. All right, so let's go to the next one. We will go 1, which is right here. We will go 2, and then we would go 3. And then we broke 2, so we're continuing to the upside. We know that the market's continuing to the upside. We see 1, we see 2, we see 3. And then, matter of fact, I'm going to go lower because it made a new fractal. So let's go 1, 2, 3. It made this low fractal. So for us now, for this to be a continuation, we have to break 2. If it's going to be a reversal, it's going to break 3 because the trend is moving higher now. So to continue moving higher, we need to break 2. If we fail to break 2, we're going to break 3 more than likely, or we're going to range. So when we watch for the break of 3 or the break of 2, and we'll know what's going to happen. So at this point, we don't know what's happening right now. All right, so we want to find out what's going to happen. Let's see what the market's going to give us. So the market comes up all the way up to this level and fails to violate this level, comes right back smack dab on it, fails to violate it. And at this point, we could be thinking maybe ranging, because if you fail to break 2, you could range, right? You could range in this area and then break, or break the other way. So we would probably start to look at the market possibly ranging. Now, when it came to this level, it looked like it was going to hold here, but then it broke again. So I would mark this an aggressive entry here, and I would be in the trade right now. All right, so I know we're not ranging, and then I can keep this for support and resistance. I would keep that on my chart for support and resistance. I know we're not ranging, all right, because we came down to this level. Now I still don't know that because we haven't violated this level. I took an aggressive entry, so we could still range between the 2 and the 3 level here, because that's right where we are. Okay, so we'd be 1, 2, 3, 4 came right smack dab up here, so that eliminates the move higher. But we could range here, so we would think about that. So let's see what the market does. The market broke lower, so this is where I would enter my trade short, and then it continued, and then we would let the market do what it's going to do. Now we made a new fractal, so we're in this trade here. So when we entered this trade, our stop loss should have been a couple places. So we didn't look at the stop loss for this. When we entered this level with an entry right here, based off of this break right here, we should have had a stop loss at least here or here, because this is the fractal you're breaking right here. So the high of that fractal, or here. At all costs, wherever you take, because this is the candle that broke the fractal level. This is the fractal level. This is the fractal that you're violating high, and this is the previous bear fractal. At all costs, all of these stop losses, whichever one you decide to take, should not be more than 3% of your capital loss. So automatically you're thinking loss, and that should be 3% loss of your capital. Now if it's more than 3% loss of your capital, well, then you can't take the trade. You either reduce your lot size or you don't take this trade. You don't try to get in here with a smaller stop loss, because you still have to respect the structure of the market and give the market the room that it's due to move. All right. So now we're going to continue moving, but we're going to put our entry now at this point. Let's move this off of our chart. So we have that level, and we're going to go now. So the market made a new fractal here. So I'm going to move it to that level. So the market is ranging. So which way is the market going to go? Let's continue to count. So just because you get into a range doesn't mean that the market's not going to go your way still. All right, so look at this. So even if the market ranged this much, we have a 1, 2, and a 3. Until it violates this level, we still have 1, 2, 3. And if it stays in here, never closes above this level, even if it makes a new high fractal, as long as it doesn't close higher, well, then we're still got a 1, 2, 3. So we'll look at what we have. Right, so we had this first 1, 2, 3, and we broke 2 to continue to the downside, and here was 4. All right, so now we said 1, 2, 3. Even if the market continues to go over here like this, we could say 1, 2. We could put the 3 in the middle, and then when the market breaks, if it broke to the downside, we would still have 1, 2, 3, and 4 wherever we were looking to shoot. Now if it broke to the upside, that would be totally different. But at this point, you just keep the mind of trading the direction of the 1, 2, 3 until you violate it, and you haven't violated it. All right, and you're still breaking bear fractals at this point. Now you are ranging. All right, so with that range, it could change a little bit of stuff here. But we have our entry. I'm going to remove this. And so we're looking for the market to go lower. We're triggered right here. So where's your stop loss? We're triggered. Now we could enter at this level, or we could enter here. At either cost, your stop loss has to be at least here, fractal that violated, or one of the previous bear fractal, the highest bear fractal. So you see your stop loss levels. All right, and I don't recommend putting your stop loss right here. All right, so you could monitor your trade, and if it does come back in there and you kind of don't want to let it go any further, but I recommend giving it this room, because usually when we break, we're going to continue with the move to the downside or to the upside, or depending on which way the market was going. So let's continue here. The market made a new fractal here. So it made a new bear fractal. So I'm going to look for an entry at that point. My trade is triggered already, but now I'm in a drawdown. So I made profit, then I'm now in a drawdown. That's if I put an aggressive entry. If I wait for the next candle to close, then I'm in the market here. So out of those spots, again, your stop loss should be either here. If you closed here, you probably will go here. The fractal that you violate is here, pretty much a little bit higher, not much. And then the previous bear fractal would be here. So those are your stop loss levels. You're in the trade at either this level or this level, and you're going to the downside. All right. So let's let the market roll, see what we get. We got a new fractal here. All right, so the market made a new fractal, and are you aware what it's doing while it's making these new fractals? We'll be talking about it shortly. But anyway, the new fractal, we still have the confirmation of the 1, 2, 3, 4. So we have 1, 2, 3, 4. All right, confirmation of 1, 2, 3. The market continues its direction. So we have 1, 2. We need to see the 3, and we don't see that yet. So we see a 3 now because we violated, we made a new bull fractal up here. So now we have the 1, 2, 3. Now we need to violate 2. So you have your 1, 2, and your 3. Whichever way we violate lets us know. So you violate here, it's a continuation. New fractal here. So I'm going to move the fractal here. So now it looks like the change is coming. All right. So at this point I would start to wonder, because it looks like we're having a change, but we haven't broken this to confirm a change. All right. So still can violate to the downside here. And we do. We're triggered. And we got a new fractal here. So we're going to put a short there. So basically you got a 1, 2, 3, 4. To market structure continues. So now you have a 1, 2. Now we're going to see where our 3 is. So 3 is there, and we broke the level, and it's confirmed. We broke this level. We're into the trade. Your stop loss should be above this candle here. At least above this level, and finally this level maybe, but you're in the trade. If you waited for the candle to close, you're here. I would still put my stop loss at this point. So now the market continues. Made a new fractal, so we want to look at taking our short there. So now it kind of broke this fractal. It's in between fractal, but we did break this fractal with this candle. So now we may be changing, but we made a new high fractal. So we really haven't violated the high fractal. That's what you want to be concerned with. So we still have the 1, 2, 3. We need to violate either this level or this level to confirm. So if you put an entry here, you would have been, so let's go back. Actually, we'll just talk about this. If you put an entry here, you would have been triggered, but the true 1, 2, 3 happened when the market came up here now and made this high fractal. So then the market violated this fractal. We would have put our entry here instead of here. We would move up to this level, and then the market goes lower. And you can see it's a good trade still. And now this is where we probably start looking at getting out of this trade, because we have a rejection here. You made good profit, but now we're going to continue to watch the market, see what happens. So we have a new fractal. We're going to put our entry there, sell stop. So we still have the 1, 2, 3 structure, 1, 2, 3, but we made this low here. So if this is 4, then that means if we violate this level. So what I'm thinking of, my fractal, I could kind of look for the short here and look for possible long here. Now let me see, did we have divergence at this point? Not really. So I want to see where we break here, because my 1, 2, 3 structure is dependent on which fractal we break. So we're going to see where we go. And we break that level. This would have been very tricky because the market's ranging now. You probably would have lost a trade or so here, and then the market breaks to the high. Yeah, more than likely you could have lost a trade in here. But considering the loss based on the wins that you would have made here, that's a big difference, okay? Because you had a lot of good trades in here and fractal breaks, and you just keep counting your 1, 2, 3. Now sometime it could get tricky because you see here, but this 1, 2, 3, 4 structure started basically 1, 2, 3, 4. Even if we look at this 4, none of these came lower than this point, and then it violated a bull fractal, so we knew the market structure was changing. So there you have your fractal break trade. All right, that's based off of just trading them fractal breaks, looking at your support and resistance levels, showing you how to look at your 1, 2, 3. The things you need to consider are your stop loss levels, your support and resistance levels, your divergence, and then also you need to put alerts at these levels. If you know your 1, 2, 3 is a continuation because that's where you've been going, then every fractal, once it's developed, you want to put an alert. So you put an alert, or what I would do more so is, like, if I'm looking to trade this fractal, alright, or any fractal, so suppose we're looking to trade this fractal, I would put an alert a little bit higher than the low, because that's where we want to enter the market. So now when the market comes to this level, I'm already prepared, because my entry really would be down here if the market was coming back, made no break here and came back down. Alright, I want to be a little bit early, so I would put an alert in this area. And then I could put my sell stop here, but I want to see the market, so I want to be alerted when it comes here. And then that's what I would just play it out that way. So always put your alerts at your fractal breaks that you're looking to take for the next trade. And then you would just keep putting alerts and then entries and then alerts and then entries. So sometime it could get tricky, and sometime the market doesn't go as planned, just like we just saw here, a very nice trend to the downside. It really works well on trends, and that's why this is for a trending market, these fractal breaks. And also, it's not called a fractal breakout, it's called a fractal break because I'm taking the break of this level. I'm not taking a break out of a range, basically break out. You're not breaking out of anything, you're continuing to break and break and break. Now if we had to break out, we'd have to break out of a range. Therefore it's more of a breakout trade, and I wouldn't trade breakout range trades too much. Now the breakout range trade we had here, still continuing the 1, 2, 3 formation. Right now on a bigger range or big range scale, I don't like to take the breakouts of ranges. Alright, so that's what you have here, your 1, 2, 3 structure and your fractal break trade without Ichimoku. So what we're going to look at next is trading this with Ichimoku to get even more confirmation of the direction that you're going into. Now we didn't look at our first fractal break, right? So we'll look at the first fractal break, and then we'll look at the basically when we look at our first fractal break, you can see I'm going to go back to these levels. Alright, and when I look at that first fractal break, I'm trading the break of the fractal, the very first fractal. So let's go back and look at this. So all the way up here, the market was breaking bull fractals, not breaking these bear fractals. You broke a bull fractal here on a trend to the upside. You want to see a trend to the upside or downside. It made another fractal. So in order to really move, you're going to have to break that fractal. But you're watching to see, because you know this is the first fractal level that could be violated. So on this, you could really wait for your close, which would be much safer. Now if you didn't wait for your close, you would have been in the trade right here. Alright, but you want to get into the trade. If you did, you'd get in down here. Now expect a pullback, because you know we're going to pull back to the fractal that we break a lot of times. So even if you enter here, you could expect the market to pull back, right? So that's basically your first fractal break, and we'll look at some more of those. Pretty basic. The only thing we don't want to see is a whole bunch of fractals together and then we break the first fractal. The first fractal should be sharp, just like it is here. The first fractal break, you don't really want to see a bunch of ranging and then break that fractal. You want to be immediate like this. Alright, pretty immediate. So what would be immediate would be like here, you broke this first. Actually, this is the first fractal. You broke it right there. Alright, and then this is the first fractal high, but that's way too far. Alright, and then here, when you broke, this would have been a first fractal break here. Not too many other looking opportunities. This is a first fractal break to the upside, and then you would have looked at the market breaking the first bear fractal. Now if you did here, this was a weird market here, and it probably would have been different to trade. Alright, but that's what we got. That's what we're looking at. So I want to go to the next thing we're going to look at is trading the breakout, the fractal break with Ichimoku. It's going to help you to know which trades to take. And then you will look at the first fractal break also with Ichimoku, because there's a real good sign that you could see with that first fractal break when you're using Ichimoku. There's some good signs with the cloud and Kijinsen and so forth. All right, so we're going to end this right now, and we'll go to look at trading Ichimoku with the trading fractals with Ichimoku. So let's go look at the charts using Ichimoku. All right, remember, so now we are here looking at trading that fractal break using Ichimoku. Okay, so prior we weren't using Ichimoku, but now we are. So there's two ways you can trade this fractal break. You could trade just take every break, but then we have a filter using Ichimoku to help us decipher which trades would be best to take. Now, there's no system that's going to make you 100%, so this is a good way to help you. Now, I did a lot of training basically in my early times with Bill Williams' system. I got his course. I still have the course. I have every video of the course, know the course inside out, know how to trade his system using the alligator and all the indicators. But based on everything that I did, I don't like using all those indicators, and I didn't like everything that it does. So therefore, the same thing that he's doing with the alligator is the same thing I'm doing with Ichimoku. We are doing the exact same thing, but the only difference is he's using moving averages and we're using moving averages, because that's all both of them are. And we're using Ichimoku, and we're offset basically, we're offset into the future 26 periods. He's offset like 5 on one and I forget 8 on another and so forth. But we're not really, to me, I would have traded the alligator if I thought it was better than using Ichimoku, because I've done it for a while before I decided that I didn't think it was good. I didn't think it worked well. So then I said, but I saw how well the fractals worked, and I saw that I wasn't getting the best trades using the alligator. So once I really got deep into Ichimoku and realized that I could use that for understanding how to take trades with the fractal based off of the crossover, because these crossovers, that's basically the way you want to really be following the market. That crossover is telling you a lot. And here you see the crossover, you got crossover, you could see a flat Kijinsen. So we know the market's ranging here. So when we don't really want to take the breakouts really at that point. And we don't call these really breakouts. I just call them fractal breaks, because really a breakout is a breakout of an area or of a range. It's like you're saying you're breaking out of something. We weren't never in anything. We're trending and moving. If we were in something, we'd be in this range right here. That's inside of something. You're breaking out of a range. But we're not breaking out of the range. We're breaking, and actually we're just breaking the fractal that moves higher or lower with the trend. And a lot of times you're not going to get good trades on fractal breaks when the market is ranging. So therefore it's good for you to understand that structure, and you really need to understand that structure. Just looking at this market real quick, guys, look at this candle. So you can see what the news does to you. So do not try to trade that news, all right, because that's what you're going to get stuck with. But anyway, let's keep focused here. So here we go with a crossover right here. So we got a bearish crossover. When you have that bearish crossover, you can trade the fractal break trades to the downside, the bearish breaks. So you're usually just going to put an entry at those levels. So let's get the market moving, see what it's going to do for us. Now we got a bullish fractal here, and we have one here where we broke. That was pretty much the first fractal break there. Now I'm going to show you how to trade the fractal breaks, the first fractal breaks, but in this case you wouldn't have traded the first fractal break, because when you look at this, you can see you don't have the bullish crossover. But I'm going to show you how to trade these breaks, the first fractal break only, without the crossover. All right, and I want you to see how it works with Ichimoku. But anyway, the market's going. We're still looking for the short, and we got a big break here. And then now we got a crossover right here at this candle. So when we got this bullish crossover, we now could take the fractal breaks. So the crossover happened on this candle. So now every fractal after that, we're going to look to take a trade with. The market created a fractal there, so we're going to look to take the trade. So we just put an entry there, And we talked about now the market made a lower fractal. I do not like inside fractals. This is not an inside fractal, but I don't like inside fractals. It almost looked like one, so I was going to say I don't like trading these inside fractals. An inside fractal is all I'm saying, it's inside the range. It's not a real true fractal. It is a fractal, but fractals represent the start and the end of something, really. The start of the trend and the end of the trend and the beginning of a new trend, end of the old trend. When you see that, and it's the start and end of a move, but when they're inside the trend, it's basically because you really almost have like a shared fractal. The market didn't do anything for a couple candles inside that little move, and therefore it's not really correcting itself. You get the real trend on the correction. You get the real fractal on the correction. So we have our entry set, and we're going to take this fractal break right here because that's the next one. So we're triggered already. And you made a little bit of profit, then the market's pulled back. Now your stop loss, big stop losses, depending on where you're going to have your stop loss, okay? Because when we look at this, you would have got triggered here more than likely, and you could put your stop loss down here. You could put your stop loss down here at the fractal that you're violating, and it's not always going to be this big. These are some big candles. Or else you could put your stop loss down here. Now you're in a drawdown well, you're kind of making slight money here. Alright, now had I not taken that trade, I also could put an entry order at this level. Alright, so you could see we get triggered on both trades. We're making profit on both trades. So now if I had taken, alright, so we took this trade, we're in profit. But now with this trade, I could move my stop loss down to here, or at least when we broke, I could move my stop loss. First I would start out here because this is the fractal that we're violating. So I would start my stop loss there. Stop loss here. And for me, I'm so close to the previous bear fractal, I would just go there at this point. And then the candle that violated, I can move it up to there. Now keep in mind, when you move your stop loss up to here, let's see if this happens what I'm thinking. You guys know what I'm thinking, right? Let's see if it plays out that way. Alright, I don't think it's going to play out that way, but when you put your stop loss here, and we would have moved it because we got more candles, I wouldn't have kept it there. But sometime the market comes back quickly right to this level again. Alright, because what's it doing? It's bouncing off of that fractal level and then moving again. So sometime it makes a move and then comes right back. It might take you out after it already made profit. But in this case, we were well ahead of the market and we made good profit. So now we're going to put another entry here. Alright. We're triggered. Alright, so when I'm triggered, I start off my stop loss. I would have started it here. For me, I stay here. But this is too big for you. You could be on the candle that's being violated, but that's pretty much the same size. And then wait for your violation candle and then put your stop loss there. And now you have a little bit, because when we don't want these to really pull back. So fractal breaks, when they move, they should just move. You shouldn't really get a big correction on it right away. If you're going to break this, you're going to break it. You're not going to break and then come all the way back. That means you don't have the trade. Don't sit and let it go. Alright, but so I'm here right now. We made profit on this trade also. So we have another fractal. That we're looking at. Now to me, I'm probably thinking we're not going to come back higher, but we're going to see what's going to happen. Because we're flat here, we got a big thick cloud. Sometime this big thick cloud at the top of a run signifies that there's a lot of volatility. You're going to see the market probably roll over and drop to the downside. But let's see how this plays out. We're going to continue to trade the direction of the crossover. And now we broke a first fractal here. Barely broke it. We just got the crossover on this break, so it'd be kind of iffy for me if I was going to take this trade, because I would be here and this candle just closed below. So I could take the entry, but I would be entering there. I want to enter it on the break here because we didn't have the crossover at that time. But like I was telling you, when you see the market up here like this and you got a big thick cloud like this, and you could see span A starting to roll over, that's signs of weakness. And then also we probably had, let's go back to, let's put an indicator on here real quick. Let's put the ultimate oscillator on here. So I got two indicators on here, but you could see the divergence at that point. You had bearish divergence, all right? For all that haven't taken the course, please take the course. It talks big time about the divergence. This is bearish divergence, all right? And this is reversal divergence because it's regular divergence. Hidden divergence is going to be continuation divergence. There was no continuation divergence. There was hidden, there was regular divergence, which signified that we probably would see the drop when the market got to a certain level. Now I always would go over and check the top, see if I'm near a significant top when I got to that point and that divergence kicked in with that big thick cloud. All right, so that's what you see, the market dropped. Now we got a bearish crossover, right? So with this bearish crossover, we're going to start taking every bear fractal break. Now this one's iffy because we would have been in here now and we would have put our stop loss here or up here. So that would have been our first opportunity. Another fractal developed. We're going to take a trade here. We got a crossover that's bearish. Now for me, you can also use your Kijinsen as your stop loss level. I wouldn't use Tenkan-sen because the market comes back to Tenkan-sen. Now we haven't been triggered. That's triggered already. If you got the level there, that's a scary trade right there. But it worked out and then pulled way back. Probably would have made profit. I'm sure you want to let this come all the way back and stop you out like that. You would have had to make some profit. Now it pulled way back, way back. All right, so the next candle really pulled way back. We're still bearish, so we're looking at the next trade at this level. Whoops, now we're looking at a trade at this level. So we would have got triggered here. If we take the level trade, we would have got triggered. The candle didn't close below the fractal though. So you wouldn't have got triggered if you were trading conservative. Aggressively, you're going to be triggered already. Let's see if your aggressiveness pays off. Oh, your aggressiveness probably didn't pay off because your stop loss has to be at least up here. But then you would have probably moved a little bit and you would have got stopped out. I'm sure you wouldn't have made much profit here. The market moved. I don't know how much that was. So if you got triggered, let's see here. Uh, 39 pips, you wouldn't have done much there. You would have got stopped out for more than that. All right. So we looking at the fractal here. This is our entry, bearish still. Triggered again, and we're in a trade. What I don't like are these major big candles before it pulls right up to the level. Because now, you know, the run is like, how much can you get with the run? But this is the way that it goes. Again, you would have probably been close to stopped out. If you use this level, you'd have been stopped out. All right, but we want these things to take off for us. So we're going to move this to the next entry because we still have an entry there. And we're triggered on this trade. And it pulls back again. This is like 3 times in a row that we haven't really gotten a good trade. Now for me, the stop loss is up here, so I'm still good on all of my trades. But see, that's such a big difference for somebody that's just taken this level right here. You're going to be stopped out. This is the fractal that broke it, and you got stopped out. Previously, you would have got maybe stopped out here, and then we said you would have got stopped out there. All right, so we got triggered on this one, and we're going. We got another entry here, so we get triggered here. These big candles coming up on that really do something for you. again, the market pulls right back to the level, stops you out. Now, when I say stops you out, I'm not really saying if you made profit, because yeah, you would have got profit here because you entered the market at this level and the market went all the way down to 122. At least you would have got maybe half of that. You wouldn't have let this come all the way back to negative on you. All right. And so you can see our next opportunity is here. Man, I don't like the distance on these, and that's why a lot of times you won't see me taking a lot of fractal breaks. Now you're in the trade and you're losing this trade, but looks like you won this trade maybe, because now your stop loss is minimum here, but then it made a new fractal, so you would have put your stop loss at this point and you pretty much were where that was, and then you got triggered again on another trade. You're looking at the market giving you another trading opportunity, and it gave you some profit, pulled right back again, and now has a first fractal break. All right, with that first fractal break we got a TK crossover. Let's play this one out and see where we go. So now we could take these bull fractal breaks. All right, so that's the next entry, and the trades have been kind of rough a little bit. I'm going to take this entry. Now we're looking like we're starting to range, so I want to be aware of that. But I'm triggered on that trade. And we make some good profit. So from this one, we lost a couple trades back here. We didn't make a lot of profit back here, even on a pretty good trend, because you could see when you break, you're such a far, when the market pulls back, like this one wasn't super bad, but when you break these levels, it's a good run to get to the level, and then you pull back immediately, and then you get a good run. So if you had entered this one here, you would have got the profit, and you definitely don't want it to come all the way back. But now look how far this fractal is before you can break it. So that's what sometimes, you know, I don't just trade blindly, because to me, I would say to myself, I probably won't take some of these because of that. So you could see the distance here. Your better trade would have been these trades, and that's why I'm a pullback trader, not a break trader. All right, so my trades, the best trades that I'm going to trade are going to be your bounces on your Tinkinson, your bounces on your fractals, your bounces on your Kijinsen. That's because they follow the trend, and they get the trend at the best spot possible, because you're pulling back after a correction. You're getting in the trade. After a correction, you're in the trade. On the breakout trade, most of the time we're in where the correction, the middle of the impulse move, the impulse wave, are near the end of it. All right, because look at, if you say, let's look at this. If you look at this level, from here to here was the move, roughly 250 pips. But to break that level, you had to go 125. That's half of the move already. All right, so you got half the move, you make 125, and you're not going to make all 125, because the market comes down here, then it starts to pull back. You see you got a rejection. You probably don't make it all. So you probably make out of that trade, if you got that break right there, you might get 69 pips, 70 pips. You see what I'm saying? So the breakout trade, the break trade is kind of tough sometimes, when especially if you're not looking at the level. So look at this move here, and you can see this move. This was 232 pips, but to get just to the breakout level, it was 193, right? So not much profit to be made there. All right, maybe 40 pips, and you wouldn't have made all that profit before the market came back. And that's probably one, yeah, we said you wouldn't have got stopped out because you had your stop loss there, and then if you stayed in that trade. So basically, let's see where we could have gotten. We're going to say we got this trade. We pull back to, our stop loss is a little bit above this level. This is the easy one, We never broke it. So then if we say we make our max profit would have been 121. And I'm sure you wouldn't have made max profit on that. So maybe you get about, hopefully you get the, yeah, because down here is 120 something. Then at least get half of that. All right. So now we took our other trades. Here anything that we didn't do well on, well, we caught a good run and we did well. So when we took this break, the maximum we could have done was 231 pips on the break of this fractal level here. 231. That would have been nice. All right. So now we're going to move again. And you could see we got a level here. Now see, this is just what I'm telling you, but also another thing to really keep in mind. So if you're looking at your structure and you say, well, I'm going to take this break, how far could that break go on a measured move? So that's a thing that you want to calculate. So the measured move would say that we could, oh, wrong thing. So our measured move could take us like this. And we would say that our measured move could go up into that area. All right. So if the market completed a measured move, we would know that breaking this fractal, we can probably see the market go here. And that would be the same thing you could do back here to understand where your move is going to be. So let me show you what I'm talking about. So like where back here, where we broke this fractal right here and entered the market, how do we want to know where our move is going to be, right? So we're going to go like this. So we're saying we're going to break this fractal. The market pulled back to here. Where's the level, actually? Sorry, my bad. We're breaking this fractal right here. So then when we pull back, we're saying that the max, we were pretty much at the max, but we came down to our Ichimoku level, and that's what hit the trade off for us. All right, so when you're looking at your target, you're looking at 1, 2, 3, where's my 4? All right, because you're breaking this fractal at 2. And this is why I tell you I don't trade the 2. I don't teach people to trade that 1, 2, 3 like most traders are taught to trade that 2. That is fluctuation, and that is where you get caught most of the time in a bad trade. All right, you have to understand that. So now, had we broken this level, all right, so we want to know where our possible target is. We will go 1. What am I doing? Wrong thing again. We will go 1, 2, 3. So if we take this trade, this break right here, we're going to say that our target is way right here. We're like really close to it. So would we take that trade? All right, but it ended up making this level here. It would have been iffy to take that trade, right? Now you're not always going to make your target, and sometimes you're going to over exceed your target. So then when we look at this, if we break this fractal, we go 1, 2, 3, we're shooting for 4. And let's see if we even can get to that based off of the market. 1, 2. This is a long run too that you had right here. So you may not see another move like that. Now the correction wasn't super big, so we could possibly see a decent move to the upside. Now we break, and we pretty much came close to that level. Yep, we didn't come far from that level. All right, so you had a possibility of making some profit there, which would have made you about 150, 151. All right, that's max. And now we break that first fractal. All right, so I'm looking to still, based off of the rules, I'm looking to trade this fractal break. Now let's see what the market, if the market gives us any more opportunities. You could see a crossover developing. And you got a crossover. Yep, so now you're going to take the breaks of the bear fractals. And from there on out, you take the fractal break to the downside. Now, if the market starts getting sloppy on us, we're triggered. And we lose that trade. Now, pay attention to the market. you could see what the market done. When you lost that trade, look back here. So now you see that the market's kind of in a range. All right, and it failed to see this fractal that we violated right here. The market failed to break that level, so you could see where it boxed. So now you go to your lower time frame and you trade this as a range. You realize you're in a range. You take that one loss. You're not going to win every trade, but you take that loss and you got to understand why you lost. So look at the market and you could see that you had a couple crossovers here. So for me, once I see too many crossovers, I kind of realize, hey, I might be in a range here. And then you could see you are in a range. And then you could start to say to yourself, well, now from that point, I'm going to trade the range on a lower time frame. So for me, what I do now at that point is box this in till the range goes away. Mark your levels and then go down to your 4 hour, or maybe to your why is that not showing there? Oh, I'm sorry. Well, anyway, you mark that down and go to your 4 hour or go to your 1 hour and trade the range levels. All right, so that's trading Ichimoku breakouts. That's trading fractal breaks with the Ichimoku. So we're gonna go and look at the first fractal break. So I'm gonna let this soak in for a second. Just sit here and think and say to yourself, am I gonna take every fractal break? Am I gonna be aware of the distance of the breaks? Am I going to be aware how far the market pulled back? Like this here, you could see this was a nice correction. You got a TK crossover that's bullish. The correction here wasn't super big from this point to this point. So for me to get to this fractal, from here up to this fractal wasn't super long. So I still had a good opportunity to make some profit. So I would have, if I'm looking to break this fractal, I'm going to mark my levels and I'm going to see where the target is. This was the target and we easily made that and it went through the target. Alright, but when it rejected the target, I wouldn't have taken my profit here, but when it came up this high, came back and rejected, I probably would have put a stop loss a little bit below that level. This is hindsight now, right? But anyway, you could see the market still gave you a little bit more of that before finally breaking the first fractal. Alright, so let's look at the first fractal break and understand what we're looking at with that, and then we're going to end this session and we'll move on to understanding how to trade with the fractal bounce trade, the best trade that you're going to trade. All right, so let's end this and go to looking at the first fractal break. Let's go to that session. All right, so we're going to look at the first fractal break and we're going to look at how to trade that and some signs that you could look for that you may be getting a good first fractal break. Now, not all fractal breaks are going to be good. Not all first fractal breaks are going to be good, but they do yield some good profit. Okay, so when we look at these trades, using Ichimoku helps you a lot, because I think Ichimoku helps you a little more than not having anything on your chart to see that first fractal break, because Ichimoku gives you some signs that the market is getting weak. All right, so one of the things that I'm going to be paying attention to is my cloud there. Look at this cloud. Before anything ever happens and I see that cloud this thick, I mean, that is super thick, and it's flat on the bottom and it's starting to roll over on the top. So when it's rolling over, the market's starting to drop, and this has reached the peak. I always want to look to my left to see if that level is relevant to any support and resistance levels. So I just always will mark that, and it's not always going to be, but let's see if it's relevant. All right, so there's some levels that it's pretty in line with. If we look at this level here, this is pretty much a good level here. So we just broke through a strong resistance level, pretty much, it looked like. Now when I look at this, one of the main things that I'm looking at is this cloud again. Okay, so I see that thick cloud. It's kind of letting me know. And when I see that thick cloud and span A rolling over to the downside and you're flat, then I kind of think something's going to happen. And then I start to look at what I'll look at now is my divergence. Okay, so do I have divergence? And I do have some divergence. From this point to this point, the market was going down. So if you look at that, at this point here, the market's going, the indicator's going down. And that's basically from this point somewhere in here. While this was going up, this was going down. So these are doing this. Here's what these are doing. This is the indicator going down and the market's going up. They're getting farther apart. All right. And eventually they got to come back together. That's what's going to basically happen here. So we are getting farther apart because, again, we're going down. The market's going up. And then you have that area. And you want to see these eventually get back online again. But the thing about it, this cloud, super thick, flat, rolling over. All right. So that's a good sign. And then your divergence. All right, so let's play this market out, see where we go. And another really good thing, in a strong trend, you don't come back to Kijinsen often. You usually come back to Tenkan-sen. And then a really good thing to understand is that if you develop a fractal right at this Kijinsen level while it's flat, and if the market breaks that, that's good, because you're breaking two signs that the direction has changed. You're breaking the Kijinsen and you're breaking a fractal. Change the direction for both of those. So the other thing is, when this is flat and you got Tenkan-sen above, this is like a waterfall. This is the edge of the waterfall. All right. So what happens on the waterfall, this is the edge of the water. This is the edge. And then this is the water. And then it rolls over the edge and you have that break. All right. And that's why I like to call these upper ones like a waterfall. So I look for, like I call it, a waterfall trade most of the time, but it's the first fractal break. So we got that first fractal break right at Kijinsen, a support level. Another good thing to keep notice of, can we get back to that level, to that all-time high? All right, can we get to that high? Okay, and then finally, look at your 1, 2, 3. So you have a 1, 2, 3. 4 would break this level. If 4 cannot break that level, then that means 1, 2, 3. If we break 3, that means we're going in the opposite direction. All right. So 3 is a reversal. 2 is a continuation. Remember, I told you that. If you break 3, you're reversing. If you break 2, you're continuing. So we already talked about that. So when you think about that first fractal break, you're breaking 3. So let's see what this market does here. And we broke. Now if you just had your level, so for me on the first fractal break, I really like to close below. I really don't like to just take that level, because sometimes, oftentimes at this level is where you get the market ranging before it finally breaks, and you could be stuck in a bad trade for quite a while, and it could even draw down more than you want. So I kind of like to see the close on the first fractal break. All right. And now there is a close. All right. And for me, since the change of direction is at the Kijinsen, I don't really have to put my stop loss all the way up at this fractal. That's a good spot, but we're going to use Kijinsen as our support and resistance level. So we're in the trade at this point. This is the first fractal break, and you can see it's in profit. And that trade would have worked out for you. So that trade, that first fractal break would have given you possibility of making, let's see, so we broke this level and we came down to here for about 148 pips. So that's a first fractal break. We're now breaking bear fractals, and then you get a crossover, you break a first fractal, bull fractal. Now this was a first fractal break in the opposite direction. All right. So let's look at a few more first fractal breaks. Let's look at, again, see how the cloud looks and understand what we're looking at with these other fractal breaks. Alright, so we're looking now at bullish and bearish fractal breaks, first fractal breaks. So basically you'll be trading at this point crossovers, bullish break, bearish breaks, because you got a bearish crossover. Now at this point, I now have an issue. I can see a couple things. You don't want to see a bunch of fractals together. This is now, if it breaks, it's not a first fractal break. So this now does not become a first fractal break for me, because you have too many fractals at the same level. So this, when I see that, what do I know? I know that the market's consolidating, ranging. So therefore you see that. So if it breaks, wherever it breaks now is not a first fractal break. So for me, I just box the market in here and see where it goes. Usually try to trade that. Now we broke, see, we continued to break the direction that we were going. And look how thick the cloud was, and then it still gave us an opportunity for a trade to the downside. Wouldn't have looked at that. But then we had this break here. I do not still call this a first fractal break. I mean, you broke a fractal in one direction, immediately broke the next direction, and then immediately broke the next direction on a couple candles. So I wouldn't have looked at that as a fractal break, because I could see we're in that range. You got a false break out of this range level, and then the market pulls back up to the top. All right, so first fractal break, you don't want to see all this ranging, because again, when you see that ranging and you take a fractal break, and I wouldn't have taken any breakouts here, right here at this point, because I want to see the market continue. Now, yeah, you could continue with your direction that you were already trading, but a lot of times you're going to get false breakouts. The market pulls back into the level again, and then finally it may go a different way. All right, so ranges are kind of different to trade, but I've shown you examples where you still could stay with the range trade while you're trading the fractal break. So basically I like to just follow that crossover. All right, so one thing that you're going to look for and understand is when you see too many fractals together, understand you're in a range. That's one of our main things. If you don't put all the things together that I teach you about and tell you, you'll miss and won't understand things. So you need to understand the structure. When we see the market's in a range, it wasn't by looking at the structure of these fractals, we could tell it was in a range. We look at our 1, 2, 3 for a 1, 2, 3 reversal or a 1, 2, 3 continuation. We look at our divergence. We mark alerts on our charts. We look at our levels, mark alerts for the fractal breaks and the fractal bounces. All right, and we're aware of all of our fractals. We're aware of our crossovers. We're aware of our cloud. These things you have to keep your mind on when you're looking at a chart. All right, so those kinds of things you want to pay attention to, because it's going to help your trading. And if you're not paying attention to that, then you're going to be in trouble. So let's look at one more first fractal break, and then we'll move on to the greatest trade in the world. Okay, so we're going to look at our last first fractal break trade and see how things work. So looking at the markets, I'm becoming aware of something already, okay? And it's not major. I mean, my cloud is very thick, but it's starting to flatten out. But the angulation is still strong on span A. So I probably would think that I may just be getting a pullback at this level. But I failed to break that level. All right, so the market came up, and we may just get a pullback back to the Tinkinson and then break that level. So we were breaking bull fractals here. All right, the market continued to break bull fractals. We did break a bear fractal here and then immediately changed direction. So see, we did have a loss with a first fractal break right here if we did take it. And actually, did that close below the level? That would have been really close. No, that didn't close. I might not have taken that one for sure. All right, but you could see basically everything else. We're staying with these levels here. So when I see the market attempt to get to this level again, I'm going to mark it as a zone, because you got a wick on it. That's how I mark my zones. But when I see that with a thick cloud, now the cloud's telling me that there could be some change, but you could see we haven't rolled over yet. But I still look at divergence and I don't see any. There wouldn't have been anything to tell me about a change here. So let's just follow this market. I don't see the change based off of what we looked at here. Now, we have angulation on span B, but span A still is angling to the upside, but our cloud is thicker. But now we're starting to ang together. I have a first fractal here at the Kijinsen, a flat Kijinsen, and you can see how my span A is starting to flatten out. It rolled to the upside, it's starting to flatten out. The cloud got thicker and starting to flatten out also. I'm really contemplating, and I'll look at divergence, and I really don't see divergence. So I see the market, this is still doing the same thing as the market pretty much. So I wouldn't have saw divergence. And now I got a fractal break, first fractal break. Now I wouldn't consider this, I would consider this a fractal break. I wouldn't consider a range just because we had two fractals here. I wouldn't consider this one in line with it. We had two here. If I had a couple here, then I would have probably said we were ranging our flat. But now I said I like to see the close on the first fractal to confirm. Well, we would have been entering the trade at that point. Now, if you're really aggressive and you took that first fractal break trade right there, you need something to back you up to understand why you're taking that trade. And at this point, you got a TK crossover also. So you had some things to help you decide here. And then let's see what this market does. So you would have made profit because now you're going to also look at your cloud. You're starting to see that change, but you ran into support here at the cloud that was flat. So you had an opportunity to make some profit here. Roughly 236 pips max. All right. So that first fractal break, and if you were really aggressive, you would have made 355. All right. So if you're going to be aggressive on a first fractal break, you know, that's up to you. But make sure you back it up looking at divergence, your support and resistance levels, your cloud. Are those things signaling that the market may change structure? Are you lined up right at the Kijinsen, and a break of that level really sets you up? A lot of times you like to see that market come into Kijinsen because as the trend's going, it usually doesn't. But when it pulls back to Kijinsen equilibrium, and then finally the market changes direction. All right. So that's what you could see there. First fractal break. That's how we trade that. Hopefully this helps you guys out. So this is going to end the session for the first fractal break trade opportunity. What we're going to go to next from this session here, you should go on to the greatest and best trade setup, the fractal bounce trade. All right. So hope this one helps you out. If you're deciding to take these trades, remember the things that we talked about. I will see you in the next unit.